That is a dangerous and growing inequality and lack of upward mobility that has jeopardized middle-class America's basic bargain, that if you work hard, you have a chance to get ahead.
President Obama this week blasting income inequality, but are his policies to blame? Hi, everybody. I'm David Asman. Welcome to Forbes on Fox. Let's go in focus with Steve Forbes, Rich Karlgaard, Elizabeth McDonald, John Tamny, Rick Unger, and Mike Ozanian. So, Steve, have his policies helped or hurt income disparity?
David, it's hurt. This is the most miserable recovery in American history. Median incomes are lower today than they were 5 years ago. The combination of the uncertainty of Obamacare, horrific tax code, and what the Federal Reserve has done to the dollar, punk recovery, less opportunity for people to rise up.
And Rick, he is criticizing something that's happened under his watch.
Yeah, here's the problem that I have. First of all, and John Tamny will love hearing me say this, I'm not sure that government is a big answer when it comes to income inequality.
We are all happy to hear you say that, Rick. Every one of us.
I knew you would be. But here's the problem. Most people analyze this in terms of, do you think Obama's policies produce growth? Was he anti-growth? Growth is actually not the issue because it only matters if it's shared. So if a company that's making $14 billion in profits this year makes $20 billion next year, what's the difference if they don't share the benefit? That's what income inequality is.
All right, but John, it is kind of the issue because sometimes a rising tide lifts all boats, to quote John F. Kennedy, Rick's favorite president. And if you look at what happened under the Reagan term, look at what happened. Both the lower quintile, the lower 20% and the top 20% increased by double digits during the Reagan growth period after those tax rate cuts.
Well, I'm one of those people who believes that income inequality is unrelentingly beautiful. When income inequality expands, that means that lifestyle inequality is shrinking because people generally grow rich by virtue of mass producing that which was formerly only available to the rich people. And so the problem with Obama's policies is they're not producing enough inequality, and that's given us slow growth and a great deal less lifestyle enhancements for those not rich.
But, Rich, the bottom line is that when you have a slow economy like we've had or like we had in the 70s, the rich very often get richer, but the poor get poorer. That didn't happen during the Reagan era, did it?
No, it didn't. And look, it's not just the Obama administration's fault. It's the Bush administration's fault. The cheap dollar policy creates financial bubbles. Who can take advantage of financial bubbles? The rich. The poor always have to sell out at the bottom. Number one. Number two, the regulatory creep, that occurred under Bush and has accelerated under Obama has made it very difficult to expand in areas where you typically find high-wage, blue-collar jobs in transportation, energy extraction, and so on. So, I hope Rick will be pleased to hear that I'm not blaming this entirely on President Obama.
Well, on the other hand, Mike, President Obama's solution to all this, and it's not just President Obama, they're saying it in Europe, the IMF is saying it everywhere, is to have this global wealth tax, to tax the rich more, to bring the rich down. That will help income disparity. What do you think of that plan?
Well, as we've seen under President Obama, David, the exact opposite happens. One of the areas where Obama has really hurt the economy is with small businesses. His investment tax increase really hurt small business. It went from 35% to 43% on passive income. This really is unusual. During expansions, you typically see new business startups accelerate. This is the only recovery I've seen going back to the 1930s where new business startups have completely flatlined. And when you increase tax rates on small businesses, you don't get that capital, all that money that Rick is talking about that needs to be spent, invested into new businesses. That's the genesis of economic growth, capital investment.
Okay, and EMAC, while small businesses are getting hurt, the big businesses have been doing fine. In fact, look what happened with the Obama recovery compared to the Bush expansion. The top 1%, we're hearing a lot about them during the Obama administration, they expanded, they had an expansion of 65% during Bush. During the Obama so-called recovery, look at how much they got, 93%.
Yeah.
So the rich have all these special deals, which is helping them get more money while the poor are losing.
Yeah, I hear what you're saying. And here's the thing. You know, we see time and again these politicians say, you know what, we do want to get pro-growth economic policies. But all of a sudden they show up in Washington, D.C., and I think they get some kind of Stockholm syndrome where they get locked into these ideas of like global wealth taxes, that the government can do their crony capitalism and start redistributing all the taxes to create growth. And that doesn't work. And Mike is absolutely right. All net new job creation over the last decade or so, even further, comes from the small business startups. And boy, they're getting really crushed, and it's really, really bad. We are penalizing success. And by the way, David, we have been at this with the president doing stimulus, $3.5 trillion in government spending, all the Federal Reserve help, with still subpar economic growth that we haven't seen in decades.
Well, and Steve, the bottom line is not only are the small guys getting hit with taxes, but regulations are just out of sight now, and that's a form of tax, is it not?
It is, David. Regulations are taxes. We learned that back in the 1980s and 1970s. And this thing, when you have these vaguely written rules, thousands of pages long, huge uncertainty, small businesses, new businesses, startups don't have the money to cope with that as large companies do. So what we're seeing now is trickle-down economics, and the Democrats were right on this one. This kind of trickle-down economics does not work.
Rick, when the rich get richer and the poor get poorer, there's something wrong, right, Rich?
Well, clearly. But, you know, I got to tell you, all the analysis I'm hearing speaks to growth. I love growth, but what good is growth if you put all the money in the 1% pocket? Another couple of quick points, David.
That's a great point, but it's been happening more during this administration. That's the point.
Let me speak to that, though. You made an excellent point. You pointed out that in the Reagan years, we didn't have as big of a problem.
Right.
What did we have in the Reagan years that we don't have today?
Tax rate cuts.
No.
Yes, we had tax rate cuts.
That may be.
We had strong
unions in the private sector to stand up for worker rights. We don't have that anymore.
We also have way more taxes and way more regulation that is stalling out economic job growth. Listen, we have more part-time jobs. Wait, hang on. We have about 400,000 more part-time jobs in this economy and 153,000 less full-time jobs. That is not growth. You cannot have growth with part-time wages like that.
But let me ask the producers, put back on the screen that income growth after the Reagan tax cuts, and get Rich Karlgaard to talk about this, because we had these massive tax rate cuts from 70% down to 28% during the Reagan era. And look what happened. Both the bottom and the top did well. That's what we want, right?
We really do want that, you know, and the mid to late 70s is a period very much like the one we're living through right now, where we had a lot of bad economic policy. We had weak leadership in Washington. We had horrible political division. And it was a Democrat, Paul Volcker, who worked with Reagan. Paul Volcker was the Fed chief, who got interest rates up, broke the back of inflation. That, combined with Reagan's tax cuts, unleashed this entrepreneurial boom that was kind of hidden beneath the surface, and all it needed, you know, was some fresh air.
Right. Instead, Steve, all that's booming right now is the stock market, and that's largely because of what the Fed has been doing, feeding this money machine, just printing more cash, which is great for the rich, not so good for everybody else, right?
Yeah, that's the form of Obama's version of a trickle-down economics, and that's why we haven't had job creation, because credit is not going to.
Although we did have a good report on Friday, did we not?
We had a good report on Friday, the first one. But this is 5 years into a recovery, and we had median incomes come down. 5 years, he's finally showing some signs of life. I hope it lasts. I'm in business. I want it to last.
Rick, last word.
Just one final word to my friend John Tamney. I'm sending a bodyguard over to you today in Washington, because there's a lot of people out there in the streets who may not share your point of view that income inequality.
Well, hold on. We got to allow John to answer that. Go ahead, Tammy.
Look throughout history, it's those who get enormously rich who make our lives better. Income inequality loves poor people. If you grow the economy, lots of inequality, but everyone will have jobs and they'll have the gadgets they want.
Well, I like a rising tide raises all boats.
Yeah, we all do.
Not just the cruise liners. So